Hi everyone, in this video we'll discuss what and how much travel expenses you can deduct to minimize tax liability. So let's dive right in. If you travel overnight for business, you can deduct your airfare, hotel bills, and other expenses. You can even mix business with pleasure and still take a deduction. For tax purposes, business travel occurs when you travel away from your tax home overnight for business. You can't take this deduction if you just spend the night in a hotel across town. You must travel outside your city limits. You must stay away overnight or at least long enough to require a stop for sleep or rest. If you don't stay overnight, your trip will not qualify as business travel and your expenses will not be deductible as business travel expenses. However, you may deduct as local business trips where you are entitled to deduct only your transportation expenses, example, the cost of driving or using some other means of transportation. This means you may not deduct meals or other expenses like you can when you travel for business and stay overnight. So where is your tax home? Your tax home is the entire city where your principal place of business is located. If you don't live in a city, your tax home covers the general area where you reside, typically the area within about 40 miles of your home. The IRS doesn't care how far you travel for business. You'll get a deduction as long as you travel outside your tax home's city limits and stay overnight. If that's the case, then you can deduct the hotel and meal expense. Pretty much all your business travel expenses are deductible. These costs fall into two broad categories: your transportation expenses and the expenses you incur at your destination. Transportation expenses are costs of getting to and from your destination. For example, fares for airplanes, trains, or buses. Driving expenses, including car rentals. Shipping costs for your personal luggage or samples or other things you need for your business, and 50% of meals and beverages and 100% of lodging expenses you incur while en route to your final destination. If you drive your own car to your destination, you may deduct your costs by using the standard mileage rate or by deducting your actual expenses. You may also deduct your mileage while at your destination. Now, destination expenses include, such as hotel or other lodging expenses for business days, 50% of meal and beverage expenses, taxi, public transportation, and car rental expenses at your destination, telephone, internet, and fax expenses, laundry and dry cleaning expenses, and tips you pay on any of the other costs. Now, you may deduct the expenses you pay for bringing your family members, such as your spouse or child, only if he or she is your employee, has a genuine business reason for going on the trip with you, and would otherwise be allowed to deduct the travel expenses. Important note here is that the work must be essential to your business. Example would be if you hire your son as a salesperson for your product or service and he calls on prospective customers during the trip, both your expenses and his are deductible. If you mix business and pleasure, then different rules apply to your transportation expenses and the expenses you incur while at your destination. Business travel within the United States is subject to an all or nothing rule. You may deduct 100% of your transportation expenses only if you spend more than half of your time on business activities while at your destination. If you spend more time on personal activities than on business, then you get no transportation deduction. But you may deduct the destination expenses you incur on days when you do business. Expenses incurred on personal days at your destination are non-deductible personal expenses. So as long as your trip is primarily for business, you can add a vacation to the end of the trip and still deduct your entire airfare. What you spend while having fun is not deductible, but you can deduct all of your business and transportation expenses. So to calculate how much time you spend on business while on a trip, you must compare the number of days you spend on business to the number of days you spend on personal activities. A day is considered a business day if you work for more than 4 hours, must be at a particular place for your business, for example, to attend a business meeting, even if you spend most of the day on personal activities. Spend more than 4 hours on business travel. Now, business travel time begins when you leave home and ends when you reach your hotel, or vice versa. Drive at least 300 miles for business. Now, you can average your mileage. For example, if you drive 600 miles to your destination in 2 days, you may claim 2 300-mile days, even if you drove, let's say, 500 miles on one day and 100 miles on the other. Spend more than 4 hours on some combination of travel and work. Stay at your destination between work days if it would have cost more to go home and return than to remain where you are. This is called the sandwich rule, which allows you to count weekends as business days if you work at your travel destination during the previous and following weeks. This means that you can deduct your lodging and meal expenses for those days. Be sure to keep track of of your time while you're away. You can do this by taking notes on your calendar. So let's go over the 50% limit on meal expenses. You can deduct only 50% of your meal expenses while on a business trip. There are two ways to calculate your meal expense deduction. You can keep track of your actual expense or use a daily rate set by the federal government. Either way, you can only deduct 50% of that cost. So if you use the actual expense method, you must keep track of what you spend on meals, including tips and tax, while traveling and at your business destination. When you do your taxes, you add these amounts together and deduct half of the total. When you use the actual expense method, you must keep track of what you spend for each meal. Now, this can be a lot of work, so instead of deducting your actual expenses, you can deduct a set amount for each day of your business trip. This amount is called the standard meal allowance. It covers your expenses for business meals, beverages, tax, and tips. The amount of the allowance depends on where and when you travel. Now, the advantage of using the standard meal allowance is that you don't have to keep track of how much you spend on meals and tips. However, you have to keep records to prove the time, place, and business purpose of your travel. The standard meal allowance includes $5 per day for incidental expenses such as tips you pay to bellhops, maids, and taxi drivers. If you wish, you can use the actual expense method for your meal costs and the $5 incidental expense rate for your tips. That is, if you don't mind being called a stingy tipper. Now, another advantage is that you don't have to spend your whole allowance. When you use the standard meal allowance, you get to deduct the whole amount, regardless of what you spend. So if you spend more than the daily allowance, you are limited to the allowance amount. But if you spend less, you still get to deduct the full allowance amount. So let's say you travel to New York City and live on water and protein bar. You may still deduct $38, which is half of the $76 per diem rate for each business day. This strategy will not only save you money, you'll lose weight as well. So, well, if you enjoyed my video, please subscribe and hit that like button.